things Vanguard. He's got, I don't know, 30,000 subscribers, buddy of mine. And I, in an early sort of test run for my newsletter, made a political comment, and he underlined it in red and said, "Don't ever do this again." He goes, "No matter what you might think, guaranteed that some percentage."
Can somebody say something? I'm having a mic issue. Or
well, yeah, I can hear you, but you're breaking up.
Okay, it's going through. I just don't want it to feed back through. Sorry about that. Trying to fix things here.
Yeah, I didn't get that either.
All right, yeah, that's good. I can hear you now.
You guys hear me?
Yeah, better. It shouldn't feed back now. So
I am having some technical problems here.
Yes.
Hi, everyone. Welcome to the 110th episode of the Timing Research Show for October 31st, 2016. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing the 162nd weekly report. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any past report there. I have Dave Landry back to host today, so I'm going to go ahead and turn it over to him.
Thank you, David Kosmeter. Thank you to TimingResearch.com. Good to be back. Looks like we've got a full lineup today, so I'm just going to dive right in. And Rick, let's go to you first. Tell us a little bit about HitAndRunCandlesticks.com and a little bit about yourself, your trading, or anything else you want to talk about.
Hey, Dave. Thank you. Thanks for having me on.
Glad to be here.
I started trading, dabbling around late 1988, early 1989. Win if you, lose if you, thinking I was smarter than the market. As time went on, early 2000, started to take trading very serious as I was getting ready to retire from the current position I was in at a job. Learned a whole lot about myself. I was moderating another trading room, and that's where I created kind of my own little system to help me get to where I could trade and make money. That's where we came up with the strategy behind the T-line, which is nothing more than the 8 exponential moving average, and a little strategy we call the pinball strategy or setup. 2002, great success there, went full-time trading. 2015, we started a business, our trading business, and trading for profit, hit and run candlesticks. Was created in 2005. Today, we only go by hit and run candlesticks. 2014, 2015, partnered up with a Mr. Doug Campbell and started Right Way Options. And in 2015, partnered up with a individual named Ed Carter that created a piece of software we call Trader Vision that helps eliminate emotion out of a trade by helping you create a plan. We believe that creating a plan with a trade, planning every single trade is so very important. And just shooting from the hip doesn't work so well. But that's us in a nutshell. We concentrate on price action, support and resistance, candlesticks. That's how we get to the price action, and chart patterns. I love chart patterns. So that's us.
Cool. All right, Adam, let's jump out. BullseyeBrief.com. Adam Johnson, over to you.
I did oil when I got out of college back in the late 80s. And then in the early 90s, moved over to stocks and stock options, both on the sell side and the buy side. And then we had a little hedge fund, about 10 of us, coming out of the debacle of 2000. In 2008, I left the fund and went to Bloomberg and was anchoring a couple hours a day. So if my name sounds familiar, maybe that's why. Absolutely loved it. I had a ball in interviewing CEOs and governors and senators and various other yahoos from Washington. And then left about a year ago to launch Bullseye Brief, which very simply is the 3 ideas most worthy of your time every 2 weeks. It's macro, it's thematic, and then I drill down with lots of data on my Bloomberg terminal right over my shoulder. And I use my network of contacts built up over the years to try to flesh stuff out. Obviously, I'm a fundamental trader. I'm not a technical trader, but I certainly do look at charts and spend a lot of time looking at charts back when I was trading options.
You said the F word.
Which is?
Fundamentals.
Put a quarter in the pot.
Well, I'll tell you something. Right now, I'm running 72%, meaning 72% of my recommendations are making money. So I think the key is figuring out what you're good at and doing that. And in my case, it is fundamentals, and that's what I rely on. I'm what I guess most guys would probably call a swing trader. I'm not doing something for the next week or two, but I'm not necessarily looking for the next 2 years. I'm generally a quarter or two. That's my time frame. And that's what works for me. So Bullseye Brief, you can check everything out. I publish every 2 weeks. I do a podcast. I do a Sunday night roadmap for the week ahead. And again, it's always about action. What's happening? What's the interpretation? And now what's the action? How do we make money?
Cool. All right. Michael, let's go over to you. Michael Filighera. I should know that. I had my Italian lessons. Filighera of LogicalSignals.com. How to do on that?
I'm doing fine. It's Michael Filighera.
Filighera.
Yeah. That's the American.
I've had Italian lessons.
There you go. But that's the American pronunciation, actually.
Gotcha. LogicalSignals.com is your website. Tell us a little bit about yourself and your website, Michael, for those of us who don't know you. Michael's a friend of the show.
Okay. Stock Exchange. I traded options. I started in 1978. So I guess I'm probably right up there being the grandpa here. So started in 78. I've also traded here on the Pacific Exchange. I've traded on the London Traded Options. I've traded on the European Options Exchange in Amsterdam. Traded on the Deutsche Terminbörse in Germany. And then came back to the US. So I went back to the Pacific. When the floors kind of went all electronic, I left the floor, decided I was going to retire. Too many people started pulling me back in, wanting to have information. Wanting to know about how to trade, how I trade, etc. So I kind of jumped back in and started publishing again, and also then started the trade room and started LogicalSignals.com. And my focus has turned more to day trading versus position trading versus holding a position for a long time. My personal focus is on volatility and probability and statistics.
I don't know how old you are, but judging from your, you don't look old, but you're probably the oldest day trader that I've ever known. So congratulations for making it that far. I think we're, good for you. I think we're only wired to make so many decisions. And a quick question, how long were you actually on the floor?
Of the Pacific Exchange?
Itself, yeah.
On the Pacific, I was on the floor from 78 till 87, and then I went to Europe, and then I came for 10 years, and then I came back in 97, and I was on the floor again till about 2001.
Wow. Linda Rasky was on the floor at one point, and she said you look to the left, look to the right, and if somebody was there a couple of months later, you just kind of followed them around for a while, and whoever stayed the longest. So that's awesome.
I actually know Linda.
Yeah, really cool. Was she on the Pacific with you?
She was on the Pacific. She wasn't married at the time, so now I can't remember her last name. But she was on the Pacific, and then I also spent a little bit of time on the Philly.
Oh, cool.
Where she was.
Cool.
So,
well, it's a small world, but I wouldn't have to paint it. Neil, let's go over to you. Neil, where are you? Where are you today? In the States, or you're traveling the world?
Yeah, still in California.
Cool. Neil Batho, another friend of the show, TraderReview.net. I guess Adam's a friend of the show too now. So I no longer host every week, so I'm not sure who's anymore. But I know Neil's been around. Neil, tell us a little bit about yourself. For those of us who don't know you, tell us a little bit about TraderReview.com.
Sure. I used to be a broker at a major firm. It was one of my first jobs out of college. I thought this was going to be the thing for me. I was really always interested in the analysis of picking the stocks. And what happened, they send you away to training for a few weeks. And, they give you some pocket money, and it's usually a pretty good time. But we'd have these people training us. And he said, "What business are you in?" And this was a real hot shot millionaire guy. And people said, giving financial advice. And he said, no, you're in the business of gathering assets. So I thought to myself, oh my God. He said, the only objective you have is to take money from wherever it is, put it in your accounts. Okay. The only thing that matters is assets under management. Just get it in your account. So I thought to myself, you know, this doesn't require a lot of strategy. It just requires making calls. And they said, doesn't matter how good a salesman you are, you make 200 calls a day, you're going to be a millionaire. And I thought, you know, and then he said, you're not financial analysts, you're financial counselors. And I didn't want to be a financial counselor. So luckily, before I left, I did a seminar on point and figure charting with a couple other guys who were really into this. One of these guys used to be a Major League Baseball player, I forget his name, but several years later, I started Trader Review, and I think I'm one of the best point and figure chartists in the world. There's some amazing technical analysis you can use only in that format that I'll use to time market crashes, get out before the crashes. And I send out a model portfolio of stocks and options every morning to my readers, as well as a free newsletter that goes out a couple times a week.
Cool. I'm Dave Landry, TimingResearch.com. I believe you can only predict the short term when it comes to the markets, but you can stick around longer term. Can you guys still hear me?
Yes.
Yep. Okay, fantastic. I had to switch mics. Sorry about that. I believe that you can only predict the short term when it comes to markets. As I often say, if it's cloudy and thundering outside, you know there's a chance it's going to rain soon, but you don't know if it's going to be raining this time next week or a year from now. However, the real money is in longer term trading. You can only make so much over the short term, and sometimes something really bad could still happen over the short term. So I like to take a partial profit and stick with positions as long as they move in my favor. I'm slotted as a swing trader. I've read a couple books with swing trading in the title, but I'll actually hold on to positions as long as they move in my favor. Like Neo, I do publish a daily trading plan with specific recommendations when there's something to do. Obviously, right now there's not a whole lot to do, which we'll get into in a few minutes. And that can be found at DaveLandry.com. Lots of free content there, so check out the website. Tons and tons of content. 1,700, 1,800 YouTube videos, and I think 600 post articles, etc. So, and free reports also. So check that out. All right, Adam, we're going to go over to you next. Number one question this week is, what direction the S&P will move from this morning's open to Friday's close? And that's obviously close of Friday, November 4th.
Yeah, so very simply, I think we're going down because there is just way too much uncertainty, stuff we just can't even fathom between now and next Tuesday. As a matter of fact, I actually like and recommended to my readers buying some S&P puts. I said it's completely asymmetric. The potential return from owning puts, I think, way exceeds the potential return from owning calls going into next week. And by the way, I'm not a guy who likes to generally buy options. Having been an options trader for a long time, I would much rather write premium. But in this market, I'm happy to own some puts. So I think we are at risk for going lower between now and the end of the week.
Okay, and we'll have you flesh that out a little bit more in the next question. But before we do that, rate your confidence in your answer by estimating the probability you have correctly predicted this week's market's move.
80%.
80%. All right, that's pretty high confidence. I'm impressed. All right, we'll see what happens, I suppose. All right, Michael, let's go over to you. Up or down, and rate your confidence.
I think that the markets will probably eke out a small gain on the week. But I agree that there's way too much possibilities to go in either direction. And as we get closer to the 8th of November, I think it just becomes more difficult and the markets really become very choppy. But I believe that we should continue to see some follow through on earnings reports that are still due and up. And I'm giving it about a 65% probability.
Okay. All right, Rick, by the way, guys, on the next question, if you want to get things ready now, viewers, I should say, they like to see charts and all. So if you guys want to throw up some charts or stats or whatever you want to throw up, share your screens, feel free to do so. Rick, let's go to you next. Up or down for this week between, I guess, today's open and Friday's close, and rate your confidence that you have estimated the probability correctly.
Yeah, confidence. I'm I'm going about 85% confident that,
Wow.
that we're going to end up a little more to the downside. But I also think we're poised for a very small relief rally. Looks like today we're going to end up with a little doji to here. But overall, the market, the whole chart pattern is showing a lot of selling pressure to the downside. 219.75 for a possible test, then down to 2113.15, possibly even lower. But we can look at a chart here shortly. But right now, I'm 85% sure we're headed to the downside.
Cool. Okay, Neil, you next. You know the routine, up or down, and rate your confidence.
Sure. Is this chart up now? I said screen share.
Yeah, it is. It is.
Yeah, this is just a chart you can get easily on stock charts, $SPX, S&P 500. So I guess, Dave, we're not allowed. I can't say if it breaks 2120, I want to go bearish and get back to me. No, that's not good.
Yeah.
It's not fair, right? But that's what I would like to do if I could. But I'm probably going to say down. Be careful. I'd say it's a good time. Maybe sell some covered calls for a couple of weeks if you can, if you want to hold something really bad. But I'd say maybe 65% to the downside. But there are some picks that can go up this week. Remember that. The dollar can go up this week, I think, especially depending on what the Fed's going to say on Wednesday. But the Fed's going to be hawkish, I think, on Wednesday, even if they don't raise rates. I doubt they'll do it. They're going to wait till after the election. If they are super hawkish, stocks could sell off. So I'm going to go to the bearish side. Even though you have this flat bottom here, I don't really like the flat bottoms because they can trick you forever. But yeah, I'd say bearish.
Okay. And then I'll come back to question three, but I think you already answered that for us. I'm going to go, and I'll bring up my charts in a second. I'm going to go ahead and I think I'm going to agree with Rick this week. I think we might get relief rally in here. I think predicting the markets in general over the fairly short term, unless I have a very specific setup, is a crapshoot at best, especially something efficient like the S&P 500, lots of derivatives and lots of information flowing into the market, a lot of traders canceling each other out. Longer term uptrend is still higher. If there was a way for me to predict sideways, I would. But the question is up or down. I'm going to give it an up, and there's nothing technical or exciting that would rush out and buy the market other than I think we probably could get a little bounce off of support in here. As a general statement, and I guess I should save it for the next segment, but as a general statement, I think things are beginning to deteriorate a little bit. Things are worsening. I'm certainly, what's the old saying, pulled in my horns a little bit and mostly sitting on my hands, letting things unfold. But I'll give myself a confidence of 55%, which is in here. Adam, let's go back to you for your answer. Please share what specific reasons you think the S&P 500 will be heading in the direction you choose, and feel free to share a screen or whatever you want to do.
Yeah, you bet. It's very straightforward, and that is simply that markets right now are being driven by macro factors, not by fundamental ones. And I'm a fundamental trader. But you look at the earnings numbers, and they have been particularly strong, with a few from Amazon and Apple, but you could argue that those were quirks and one character events. We are trading sideways because we absolutely have no idea, none of us does, and I don't think the pollsters do either, what's going to happen next week. The Fed, fine. I'm fine saying the Fed's not going to raise rates. But that pales in comparison to what happens on Pennsylvania Avenue. So it's a very simple, very straightforward macro call. We're not going up.
Quick question. I'm not a fundamental trader, so would you say macro versus fundamental? What do you define?
To me, macro is an overarching concept. We don't understand what's going to happen in the election. That, to me, is macro. Okay. As opposed to micro, 293 of 500 companies have reported earnings, and on average, they have beaten by 2.3% on the bottom line and about 1.3% on the top line. The beat is running about 73%. Those would be very specific fundamental numbers, okay, tied to earnings, tied to the performance of companies. And obviously, if you have good numbers like that and the market's not going up, that tells me anyway, There's something else. And to me, that something else is the elephant in the room, and we just don't have a clue which elephant.
Or the donkey.
Or donkey. We're going to come marching down the aisle next week. But we don't have a clue. And I think it scares the hell out of people. So forget the Fed, forget earnings. It's a macro call, and it's based on the elections.
Well,
this happens once in a blue moon, but this is the blue moon.
Gotcha. In this particular case, wouldn't the macro sort of be the technical analysis of the charts, because the charts are reflecting this indecision by going sideways? And I'm not loading the question. I'm just actually asking it.
So here's the one thing: when sentiment becomes unhinged, as I think it is at the moment, charts actually don't give you the usual sort of predicative quality that you'd want to see, because there's just there are these what would you call them, the left tail events, where something crazy happens, but they're like, probability of this happening is 1 in whatever. Well, guess what? Those 1 in whatevers do happen. So I'm actually a lot less inclined to A, trust the charts right now, B, trust my own judgment, or C, trust excessive exposure, given the fact that we're in front of this tidal wave of absurdity, uncertainty, call it whatever you like. But it is the election. It's what we've got.
All right, Michael, let's go to you. What developing events are you looking at or watching this week that might have affected your answer?
I'm basing that call on just technical factors. I happen to agree with what's already been said, and that even the pundits, the pollsters, really can't say with certainty what's going to happen. We're in the middle of a amazing time in our history as a country as we get to next Tuesday. So I also agree that I think based on that, there's going to be a lot of trading, what I call trading energy. Being algorithms that are waiting, they're going to make the move once they know what's going to happen. So the big call would be, it's like, well, what direction do we think that they're going to go in? I think that's not a good thing to do right now, because I think you get yourself in trouble. So based on that, I still believe that we're going to eke out, it could be only a point, could be maybe 2 points, 3 points. But I'm basing that on, if I take a look at the daily chart in the S&P, I can see that at 2120, now this is basis the cash, but 2120 has basically held since the beginning of September. A few times, but it regains it and it rallies back. So if I just kind of then base it on pattern, I think that we have a chance where they might just hold it right in here. Now, a little bit longer term, just based on pattern and based on my own personal feeling, yeah, I think there's downside ahead, and I think it's going to be major. But we're focusing on these 5 trading days. And that's where I think, okay, I don't think anything major is going to happen this week. And I also agree that it's like the Fed could sit there and Janet Yellen could, stand on her toes and do cartwheels, and people aren't going to react. I really don't feel they react. It may be very momentary. It might happen in the dollar. It might happen in the bonds. But I don't think the markets are going to have a longer-term reaction to the Fed. In fact, I don't think they're going to have a longer-term reaction to anything this week.
Yeah,
So
do you think those algorithms are going to make a prediction, kind of like the Brexit deal, and start going one way or the other? And if that happens, is there a huge problem with? I guess I got 3 questions. Is there a huge problem with them getting it wrong? This might be more for Adam. I don't know if Adam's paying attention to the options or whatever, but where are the options reflecting this? I guess you'd say asymmetrical risk. So it's kind of like several questions in there. I guess you first, Michael.
I would say, based on what I can see in the options, they're really almost. Let me just kind of check real quick. And almost to me, because my focus really is right now, I trade crude and gold. I also trade the equity indexes, but my instrument has no options. Hold on a second, I screwed that up. But I was going to go take a look at the spiders and just see what the breakdown is. And I'm going to say that it likely continues to be algorithmic driven. So when I'm looking at, what people are trading, but as of today, puts outnumber calls 2-1.
Wow.
So far
Interesting.
today, just today. But again, how do you want to interpret that?
Yeah. Well, the
It's causing a little bit-
Brexit poll problem was the nobody wanted to say that before Brexit because you were considered whatever. I'll just pull the word racist out there. I don't know if that's a correct word, but some sort of racist or whatever. And then I guess I'm wondering is when they're calling people up, if you say you're for Trump, that makes you a deplorable. So, or people a little afraid to answer their true their true feelings. So I'm wondering if that's going to have any reflection. Adam, I'd ask you. Go ahead.
Yeah.
I'd ask you. Did you look at those options, or do you have any feelings on the options and the outcome here?
Yeah. What you're really getting at, Dave, is what the hardcore options traders call skew. In other words, the extent to which a put is more expensive than a call. And right now, the puts, as you would expect, are more expensive, but surprisingly, not by all that much. I would have guessed that the at-the-money vols would be way skewed. They're really not. Now, that said, I will tell you that the VIX is now up at 17 versus like 12 last week, so the whole complex has moved up. But it is kind of interesting that the skew has not shifted more to the puts. I'm surprised by that.
Okay. Hey, Rick, hadn't forgot about you over there. For your answer on up or down and your confidence, please share what specific reasons you think the S&P will be headed in the direction that you chose, which I think was down.
Yeah. Hey, I just shared a screen. Did it show up?
Yeah, it looks great.
Oh, okay, great. Yeah, I'm 80 to 85% confident that we're going to move down with the possibility of a slight relief rally somewhere here this week. And I mean, like I said, here at Hit and Run Candlesticks, we follow chart patterns, support resistance candlesticks to get the price action in there. And I mean, everybody can see we have a downtrend here. And all we've done is put in just a weaker chart pattern to the downside. We have a bearish H pattern showing up right now that it hasn't confirmed quite yet, but it's certainly not coming out of it either. And 21, 25, 80, if we lose 21, 25, 80 right here, then I'm kind of thinking that 21, 13, 15 is going to show up right down in this area, right in here. So this 21 right now, basically today's low or last week's close is going to be pretty darn important. The whole chart pattern is just simply falling apart, and we go through the week, we get into Friday. Nobody's going to want to hold anything, so yeah. I think the likelihood everybody, today they're going to try to hang on, try to trade, try to get things cooking and going out there, but come Friday when nothing shows up, there's no gold in your gold pan while you're panning out there. Everyone's going to jump out. Boom, the market's going to drop, and then we go into election time. So,
I guess the only thing I'm somewhat hoping for would be maybe, and hopefully I could survive it because I do have some longs on, but maybe a knee jerk to the downside, flesh everybody out, and then have it go straight back up. But that's hoping, and there's no hope in. There's no hope in trading. As far as the S&P 500, we do have a bow tie, daily bow tie sell signal, and I really don't use many indicators. This is the most indicators you ever see on a chart. But occasionally I will throw a moving average in. I'd say 98% of the work that I do is simply just looking at the charts, blank charts. And but sometimes you'll get these moving averages come together, begin to spread out again, especially when it's coming off all-time highs. And that could be an important signal. But right now, what I'm really watching is the net. And net means where's the market today? Where was it a week from now, a month from now, 2 months from now, 3 months from now? And you go all the way back to about July 11th or even July 8th now. And you can see we haven't made a whole lot of forward progress. So I'm labeled as a trend following moron. And the reason I got that name was years ago, I was drawing some big blue arrows up on the chart, and one big trader was bearish, and he said, and he had a big short position on. He got very angry with me, and he called me a trend following moron. But what is, and right now it's sideways, and that's why it's so hard to predict. Now, if you take a look at a weekly chart, what's kind of interesting is we did have this bow tie down in last summer, in 2015, I should say. And that got me a little bearish in here. And then we did eventually get a sell-off from there. And then in the Russell 2000, I was looking at it yesterday, day before, we got about a 20% sell-off out of the bow tie. So that's nothing to sneeze at. And the Reedier defines a bear market right around 20%. Not that means anything. But if we do get a weekly signal, that would have me really concerned, because the last, 5 or 10 weekly signals have worked really nicely over the past 30 years or so. And this was the first one that really didn't work out so much, or in a big way, I should say. And if that happens again, I think it could be the so-called second mouse type of signal. The early bird gets the cheese. The early bird gets a worm, but the second mouse gets the cheese. So, but right now, I think we're just stuck sideways. And I think in a minute or two, I'm going to ask you guys if you have a trade of the week. And my trade of the week, I'll go ahead and get that out the way right now, would be to just sit on your hands. And I really wish somebody would tell me that 20-something years ago, that you don't have to be in there every day trying to grind it out. Sometimes the best action is no new action. So I'm going to go with that for my trade of the week. If you guys got a trade of the week you want to talk about, I'll come back around to you in just a few seconds. That's where I am with the market, sideways at best, and I think we're going to have to wait. I wouldn't get too excited. I know whose S&P chart is up now? Is that Rick? Is that your chart up?
Oh, yeah.
Yeah. Like Rich said, that support is going to be very important. And what I'd like to see is that support taken out and kind of on a fake out move. But until that gets taken out and we get follow through one way or the other, I think it's a bit of a crapshoot, and maybe just kind of soft, somewhat longer, somewhat intermediate term. Longer term, still headed higher. You can see he's got a longer term moving average on his chart there, still kind of headed higher in here. But if we take out that resistance, I think we're just going to have to follow it one day at a time, and not. I wouldn't rush out and sell the market if that resistance gets taken out. I've been watching 2100 round numbers. You certainly want to honor your stops and get stopped out of anything. Let yourself be stopped out. You don't want to pull stops at that juncture, and then see what happens from there. Okay, let's go. Let's go to the question of the week, and then if you guys got a trade idea you're thinking about, I know Adam already threw out the idea of puts. Controversy in the show is one of the complaints, and I'm certainly not going to argue with you on that, Adam. but if anybody else has any ideas, let me know when we get to you. The question of the week is, what types, and Adam, we're back to you, what types of trading do you specialize in or focus on? And I guess the second part is the clincher, or the more important part. How did you come to that decision?
So I think interpretation is what we all try to do, whether it's looking at a chart, whether it's looking at a balance sheet, whether it's looking at options prices. We try to interpret what's happening and then put that in simple terms, rules-based trades where we can say, if this, then that. Buy here, stop there. This is my target, right? I mean, we're all very logical, hopefully reasonably accurate people over the long haul. So the question is, what do I do? And you already gave me a little bit of flack, Dave, for mentioning the F word, the fundamentals.
Nah, that's okay. And that's what makes the market, Yeah, no, maybe I can learn something.
And there are all these things that are happening out there that we can talk about. I mean, as you know, if you've heard me on the show before, I am very negative on REITs, and there are a number of reasons, specifically cap rates, where effectively you've bought properties and the cash flow on the properties now equates to 3% cash flow. That's not sustainable. If you have a leaking roof, you got a problem. You cannot hold properties that long. You now have 8.7% of retail sales that are happening online, so that's creating a problem for the mall REITs, or mall rats, if you will. And so that's the kind of stuff that I look at. These big picture fundamental issues, and when they line up, I try to take a position. I have been short REITs. I continue to be short REITs. I tell my readers to be short REITs. And I like
your technicals are there. I mean, these patterns I just talked about, the bow ties, there's another pattern I follow called the first thrust, where you get a big thrust down from all-time highs, that first little pullback. So so far so good on that, and I think that maybe we could be friends.
Well,
agree.
Hey, there's safety numbers. Look, if I can help you see something on the fundamental side that wasn't on your radar, and you can help me see something on the chart side, and by the way, they both say the same thing, that to me is a very strong, combination, and we probably want to be even bigger in the position. It's like connecting the dots on that.
Gotcha. Who was it? Reginald Denny? Can we all get along?
Yeah.
Hey, Michael, how you doing over there? What's the question? Oh, what type of trading do you specialize in or focused on? What's your holding period? About 2 minutes?
That would be long term.
And how did you come to that decision?
Again, being a volatility trader, don't get me wrong. I switched to day trading because I think it's a really clean way. I like coming in without any positions, and so I can just go in and I can start my day, and it's all free and clear, and you just kind of do what you do. Now, having said that, I need to tell you that I do have core positions that I carry. I don't recommend those positions in my trade room because we're not set up for that. We're set up for day trading, and that's what I share, and that's what I teach. Now, as far as a core position, by the way, I really like the discussion on REITs because I'm totally with you. I've been against REITs for forever. But I have a core position in bond and short.
Short, yeah.
I have a core
I was
position in
wondering for a
gold.
second there.
Yeah, I was about to say, but yeah.
Right? Short bonds, but I've been short bonds for a long time. And I've been long gold for a long time. And I've been long silver for a long time. And what I do, how do you trade and work it out with all the bumps and grinds that happen in the market? Well, you go through and that's where I use options. So I love to carry bond position, but you can go in and use the bonds on the 30-year, but I love TLT.
Yeah.
TLT is a great instrument. And so I can get into TLT and I can hedge against the burps that the market will do.
Are you trading around that core position? So if you're short bonds, you might be playing intraday swing on bonds, or how are you playing that, Michael?
I could do that, or I can just feel it's like when we came down and then everybody decided, oh no, they're dovish, and so they kind of jacked up bonds and ran it back up to 177. If you've got a large core position on your short, you're either going to get buried or you go do something about it so that you can carry it.
Gotcha.
And so I'll use TLT calls.
Gotcha.
Or I'll do wonderful iron condors, or I will do straddles, and whatever happens to be there and what's trading at the moment.
All right, cool. All right, Rick, let's go to you. What type of trading you specialize in or focus on, and how did you come to that decision?
We specialize in swing trading. Overnight. I mean, once you start holding it overnight, that starts the definition of a swing trader. To probably 10 to 15 days. There may be some trades up to 20 days. But mostly what we're looking for are those swing trades with the potential of, say, 20 to 30%. Very happy to take 5% profits. We don't have a problem with that. It's all about making money at the end of the day, end of the week, end of your year. Short-term swing trading is what I would say.
Okay. And what markets are you trading?
We trade equities and ETFs.
Okay, cool. All right, Neil, let's go over to you. I know you're a point and figure guy, but I guess I'll let you say that.
Yeah, I use point and figure for my main analysis and my query engine, but then I'll also confirm with the Ichimoku cloud. So I think a chart should come up here now. This is US Steel. This is a stock I watch constantly every single day because it moves so fast when it moves. If the dollar starts to weaken a little bit and everything else is lining up, US Steel can really move. I think after the election, people are going to try to be friendly to the resource companies in the US no matter who wins, at least for a little while. You have this resistance here around 22, but normally you can peak through a bit up to maybe 23, a move here on US Steel. But I want to go over some main point and figure indicators that are really great. This is the bullish percent you can get on stock charts. And you have this column of O's here. And this is the percentage of stocks in the S&P 500 on a short-term buy signal. And once it moves into a column and it keeps moving down in that column, unless it reverses 6%, it's still in that column. So 2 months now, the technical deterioration of the market has been followed. And you really never get a really good bull market unless this is in X's. And then I also have percent of stocks above their 50-day moving average, just a linear chart here. You can see way back in July, 80%. And September, we had a move down in September, if you remember. And as this deteriorates, the market deteriorates. And I don't know if we have another question later, Dave. I wanted to go over some housing. You want me to just go over it now or go over it?
Yeah. Floor's yours. And by the way, could you give me what was the first symbol on that first? I have a stock charts account too, but you talk about that.
The bullish percent?
Yeah, $ B.
BPSPX.
BPSPX.
And if you just go up here and you just type in bullish, you will get all the bullish percents. And what's really great is you go, let's say gold miners bullish percent. I click on here. And it was 100% in July. That almost never, ever, ever happens.
Wow.
100% of all gold stocks on buy signals. Come on. Okay, so that was right after
Be a man and sell some calls, huh?
GDX. July, right? It was right here, actually. And then you had this other move. Come on, the collapse is going to come.
Oh,
and then if you look now, where is it? And if you look back here, 0. I can't believe gold. I've never seen coast to coast before except in gold. But here, coming off these lows of 0% and these buy signals on this index, on this indicator itself, we got something like 40% on the nugget, on the trade nugget, just by using this and matching it all up with point and figure.
Wow.
This is a fantastic indicator, especially when you go into the sectors as well. But I wanted to show something on housing here. And this is something you can't do on other charts. I go down here, I go percent, reversal 3%. So every box size that you see here is 3%. And you can make it slower or faster, 1%, 2%, 10%. And what you'll see here is back down here, it's 2005. Housing starts form a buy signal or a sell signal in 2005, 1833. All the way down, 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 down. The number 1 is January, then it goes through September, and then you have ABC for October, November, December. Doesn't create a buy signal until 2009. It's actually 2012 this happened, where housing start picking up. And this is exactly when house prices started moving up. So you can actually time the housing market by using this ticker symbol, housing starts, in my opinion.
I see Adam's eyes perking up over there.
Yeah, you got my top.
It's awesome, man.
Well,
good stuff.
About that, there's our best of both worlds, Dave, because we're taking fundamental data, housing starts, right, and putting it in format. That's freaking brilliant.
So if you look here, we have almost a triple bottom sell signal in housing starts. And you know what? House prices are going down. If you go in Zillow, it's going to say price cut, and rents are going down. So no more automatic ATM machines from the houses pumping into the economy. A lot of construction workers are going to be out of work, electricians out of work. Pardon?
I think you have to live in San Francisco County to see the reverse of that, because they still think that that it's a great market. I agree with your analysis. I think it's brilliant. But they haven't caught on to that here in the Bay Area yet.
I bet you they're going to tell you that it's different here. You just don't understand San Francisco, right?
Oh, you know what? You're absolutely correct. And they tell me that. And of course, I laugh at them and say, "Oh, okay, talk to me in a year."
Yeah, yeah.
With four most dangerous words on Wall Street, it's different this time.
Got a couple other things, but we can't discuss it online.
Okay.
Change this to a 2%. You can see the sell signal here. A little bit more volatility. Boom. This is not going to break out. No way. It's over. Sell your investment properties.
All right.
Couldn't agree with you more.
Yeah, it's ugly longer term, but one day at a time, and that's why I'm a trend following moron. So I'll just follow along.
I talked to a real estate agent once, about housing. This is like 2009. I said, so what's going on with housing? And she said, you know, the reason no one's buying a house is people just aren't confident enough in their job. Because you make the down payment 10, 20%. If you lose your house, you're losing that down payment, aren't you? So I think a lot of the house prices have to do with how confident are you you're not going to get laid off next year. and yeah, so and what was it? Sentiment was down. You can actually track consumer sentiment. I don't have the ticker up right now, but you can chart all this kind of stuff.
Gotcha. Let's see if I can get the chart up that I want to show. Let's see what that does. Okay, I'll just start talking while I figure it out. I believe, like I said earlier, I don't want to repeat everything I just said, but I believe you can only predict the short term when it comes to markets. But you can't stick around longer term. Longer term trading is where the real money is. Unfortunately, it's also where the real risk is. We all read about these famous long-term traders who make all this money. To tell you is a lot of them have subsequently blown up because you're going to be. I used to do a lot of mechanical testing. I'm 100% discretionary trader now, but back when I did the mechanical testing, the number's about 28% correct. So you're going to be wrong more than 70% of the time in a longer-term trend. Shorter term trend, you can get a little bit better with the swing trades, and I don't focus so much about the percent correct as I do trying to make money. But you're going to be a little bit better than 50-50 if you're doing it right. When the market's blowing and going straight up, I'm probably hitting about 75-80% correct. But the main thing is I'd rather make money than be correct, which some people get confused with. So I believe you can only predict the short term, but you can stick around longer term. And the secret sauce is something I didn't realize was that special until I was on a project with some very intelligent people. It's kind of, I don't want to say the names because it's going to sound like I'm name dropping, but it's kind of the who's who of the trading world. And one of the guys who was tracking us said, hey, it's pretty cool what Dave's doing, the way he's selling out of positions, taking a partial profit, but then widening out his stop, loosening the stop longer term, often not by doing anything, just let it widen out gradually to ride out this longer term trend. So that's the secret sauce in the money management. Money management isn't sexy. It's not exciting. One of the secret, or one of the few secrets there is to trading and getting in that short-term move. First, identifying the short-term move properly. You want to have a solid trend or an emerging trend, and then you want to look to get on and at a place to get on. And for me, that's a pullback. So I keep things really simple. And again, I draw the arrows on a chart, and if you look at my website, you'll see I have trademarked the trademark Trading Simplified. Goes up, down, and sideways, and that's on the business of my car, back of my business card too. In case I ever lose my way, I flip my card over and say, "Hey, is it going up? Is it going down? Is it going sideways?" And that'll keep you out of a lot of trouble, and it'll get your ego out the way a lot of times. And unless you're Bill Clinton, what is. So that's my style of trading. Okay, anyone? I know Adam said buy some puts, so that's his trade of the week. Well, unless you want to chime in on that, or we'll write that down as your trade of the week.
Yeah, put me down for that, and I'll tell you what, we're going to give you a free bonus second trade of the week.
Okay.
And this actually gets to the much longer term issue, Dave, that you're talking about, biotech.
Oof.
And I wrote about this in Bullseye Brief over the weekend, which I published. You look at what's happening across all of healthcare right now, and it's getting absolutely crushed by all of the campaign rhetoric. And it's easy to understand why, right? We spend 18% equivalent of GDP on healthcare. That is a shocking, absolutely shocking number. So if you're a politician and you want to get reelected, you go after anyone who's doing anything wrong in healthcare. It's weighing on the stocks. We saw this in 1993, and that was the point in Bullseye. You had a decline over 9 months of about 30%, sideways for about another 6 months, and then it took off and never looked back. And if you look at what's happening in biotech, we're down 57% from the highs. That was over a year ago. We've been somewhat sideways, and my trade specifically, if I can turn this, and this is, Dave's going to kill me for doing this because it's like not the way to show a chart, but there's my Bloomberg terminal, okay? You see what we got going here? This is the 5-year trend line for the XBI, which is the biotech ETF. And then there's the shorter, that's 1 year. All right, we're bumping up against 1-year support and 5-year support. My point is, the options have started to become extremely expensive. I like writing puts right now. Yep, I want to write puts on the XBI. It means I become potentially a buyer, and that's exactly what I want. I'm buying the biotech index down 60% from the highs. I'm willing to start doing that. I think you're going to get a relief rally once we get through the election and all the rhetoric that has crushed the sector. So biotech XBI right puts. It's my second trade of the week.
Wow, cool. All right, Michael, anything trade of the week?
Oh, hold on just a second. Adam, you said you had to leave a couple of minutes early, right? So if you want to go ahead and do your closing statement, you're welcome to.
Yeah, you want to wrap up? That's fine.
Oh, wow. Well, you guys are the best. Thank you. It's like, team timing research. And Dave, you do a great job. Yeah, I got to jump on a conference call too. So all I'm going to say is thank you. Thank you to everyone. Thanks, guys, for letting me participate. Thank you, listeners, for hearing me out. If you have any questions, go to bullseyebrief.com. Try the free trial. I put my phone number on there as well, and you can always give me a call, 917-710-8347. I love talking to guys like you about ideas like this. So, again, thank you.
Thank you, Adam. We appreciate it.
All right.
All right, Michael, let's go over to you, and we'll go ahead. If you have any closing thoughts, let us know. And if you have a trade of the week, throw that in there too.
Trade of the week, I actually don't have because I am basically a day trader. And so, like you said before, 2 minutes is, to me, that's long term.
What about trade right now? What do you have right now?
Actually, I've been paying attention to doing the show, so I haven't really been out there.
Okay.
But I do operate an auto trader, and that's a product that I've kind of brought to the trade room, and that I'm also sending out in marketing right now. And the auto trader in crude is long. The auto trader in the NASDAQ is short. The auto trader in gold, I believe, is, let me just double check, I think it's long as well. Yes, it's long as well. And everything's preset in the auto trader. So your number of contracts, your entry, your exit, stop, it's all preset. And so you just kind of sit back and let it do its thing. The trading is really dependent, again, because even the algorithm it's a trend algorithm. So it's going to determine the volatility and the probability of this trend, that either direction, and how it's going to go. So that's when it'll kind of come in, when it receives its signal. And its signals are also, you're providing all the information. So as an auto trader, yes, it's going to enter and exit trades according to the presets or the additional work that you put into it. So, oh, jeez, hold on. I just got a Skype for somebody that wants to talk to me. Like, no, we're talking hours. In any case, I don't have any trades of the day. I just kind of follow it along. Now right now I got long gold at 1273.20. The stop's at 73.50 because it's a trailing. And it's going to look to get out once it reaches, I think, 75.20. Yeah, so I'm looking for $3 on the trade.
So is the algorithm pretty much mechanical? I mean, is that how you kept your sanity all these years? I mean, I'm kind of fascinated with the whole deal.
No, I've kept my sanity all these years because I've had to learn how to trade without emotion. Gotcha. I think emotion really works against you. And so it's like, if you really become mechanical in your trading, you will be a winner more times than not. And I also attempt to, on my probabilities, work on a ratio of about 55% winning trades. That's my minimum. If they start dropping below 55, then it's like, well, let's not do this, kids, because you're not going to be able to work the numbers.
Gotcha.
The probabilities all change. So, but right now, I've got that up to about a 70 to 75%.
Gotcha. It's been well, everybody says remove emotions, but I've learned in recent years that it's physically impossible to make any decision without emotions. So you have to find a way to control or embrace your emotions. And it sounds like you've got that figured out. Yeah.
It's called an auto trader.
Yeah.
To be honest with you, I'm writing an additional poster that I will publish on the title of the article that I originally published, and it's on my website, and I also publish it in other places, is called Removing the Human Factor.
Cool. Yeah, we'll check it out, certainly.
Okay.
All right, Rick, let's go to you. Haven't forgotten about you over there.
Oh, that's okay. I'm just sitting here listening. Hey,
what types of trading do you specialize in or focus on, and how did you come to that decision? I think you've already told us a little bit about that, but if you want to elaborate, please do.
Yeah. Swing trading is our focus, and I've got actually two trades. SPXS, because I'm short on the S&P 500, so this would be a good one to be long on. Myself and a lot of us in the trading room have been long for a while. We're just waiting for this breakout of 1305 and kind of expecting, maybe another, the market gets real nasty, maybe 10%, but probably a 6, 7, 8% trade on that one. And a trade that was part of, we do a featured trade idea out to the public and to the members, and then I do a trade list every day to all the members. And one of the members' featured trade ideas today was WB as a short, and it's acting very well right now. And as we move down, you can see we're right here on a little bit of support as we speak, and we start caving in through that area. Then I would suspect we get down here to about 37 with some follow through, could be into the 200 simple moving average area. This would be a great buy if it popped up a little bit. Nice little inside buy right in here, and then just chase that thing to the downside.
That would set up what I call a first thrust. It's almost even a bow tie, meaning the moving averages come together, spread out, sort of like your moving averages are. So I certainly can't, or again, no controversy on the show. I even agree with Adam earlier. But yeah, that looks like you could have a pretty serious short setting up there fairly soon. And you know what I like about it is it's a 2-letter stock, meaning that it's probably a real company, maybe with some real earnings and some real fundamentals that could go really wrong. Not that I would factor in fundamentals, but yeah, that's cool looking chart there. And then once it breaks down, you've got all that overhead supply, keep from going back up too much. So yeah,
right.
Again, no controversy. I agree with you on that.
Oh yeah, and you know, right in here through this, say starting about 34.45 up to about 41.35. If we get down, that's just a spot for the price just to get into. It's just I mean, that looks like the area of sweetness right there. So,
hey Neil, and I know we're running kind of long, but on a point and figure chart like that, on something like WB, where it looks like it could be shaping up, I don't use point and figure, but it looked like it'd be shaping up with the support and resistance as a breakdown. Would you actually sell the breakdown, or would you wait for I don't know which one goes up? O's go up. Would you wait for a couple of O's and then sell the next line of X's, or is that?
I'm gonna
not an easy question to
bring up
answer.
my chart here.
Would you wait for a pullback? Is a question I guess I'm asking.
Just a second. I'm gonna show the chart.
Okay. Well, while you get that set up, Rick, I didn't mean to cut you off. I like good idea on the trade of the week. Any other closing thoughts you want to tell us about hit and run candlesticks, or any additional things you want to tell us about your trading style?
Well, yeah, we man, I would encourage everybody. We offer, like I say, a featured trade idea. Goes out every day. There are days that we don't, like on Fridays maybe, because that's a good day to collect money, not be getting out there trading. But if you go to the website, hitruncandlesticks.com, we have a sign up. It's free for the featured trade idea. And we've got a great 30-day trial for both hit run candlesticks and right way options. If you're interested in options, it's right there on the home page. Just click on the 30-day trial. Other than that, you know, like I say, I just confident that we're heading down. And Dave, I want to thank you for having me on your show. I appreciate it very much.
Well, I'm just a host, but you're welcome. Glad to have you here. We enjoyed having you. Dio, let's go to you, and you could go ahead and give us any closing thoughts you might have about your website or trading. And then the question is, what type of trading you focused on, which is obviously, did we already go to you in that, the point figure, and then how did you come to that decision?
How did I come to the decision on point and figure?
Yeah.
I would say it's the only place you can get the main indicator, which is the bullish percent, which has timed every single major collapse for 100 years. And that's absolute fact. It's not going to tell you how much it's going to go down, but it does go into O's, does, you know, a lot of times go into sell signals. And when that indicator is in O's, the only way you can be long is right when it turns and you're in the mega caps, Apple, IBM, you know, the indices are still pumping higher as the technicals are deteriorating underneath. That's one of the reasons. Another reason is you can get time frames you can't on any other type of charting. So I can do 1% box size, 2%, 3%, whatever you want. Works great for small cap pharmaceutical stocks that you can't chart very well necessarily on candles unless you go into the 60-minute, things like that. And another reason that point figure is really great is because it eliminates the time factor. So you're not actually changing the chart every day necessarily unless there's a significant move on the chart. So let's say you have a stock's going, you know, 52, 53, 52, 53 for weeks. That's not even going to show up on the chart. And once it breaks out, the chart will then move. So
well, that's huge because I often do whenever every time I have a stock that just kind of bases for a little while, then takes off again, that we're long or short, whatever the case may be. Yeah. I'll put out what I call a dead money report because people think, oh, it's not going anywhere, I better get out. But I like that it removes that completely. Is if you're just following along, you don't look at every tick, you just look at the X's and O's. So that I hear you on that. That makes sense.
Yeah, and then I just got into the Ichimoku cloud about 5-6 years ago, and it's nice to be able to confirm things with the cloud, so you're not just using point and figure. I throw in the candles. You know, if I get a really nice hammer candle right at the bottom of a thick cloud, I'm going to say, hey, you know, we're going to go for some calls here. And we've done that lots of times on things like TLT is great for options, very little time premium, and UUP for the dollar, really good for options. Almost no time premium. It's pretty amazing. And you line it up on both of those together, and works out great a lot of the time.
Cool. Well, again, my name is DaveLandry.com. Dave Landry with DaveLandry.com. As far as my trading style, again, I believe you can only trade the short term, but you can stick around longer term. I have tons of free reports on my website, so get to know me first. I do weekly shows, weekly webinars, which we don't take ourselves too seriously in them, so check those out. And they have about 1,700 YouTube, so get to know me first and get a feel for what we're doing. And usually, I would say 95 to 99% of the examples that are shown in the weekly chart shows, which are up on YouTube each week, come directly from the trading service, and many times I show the actual portfolio, and you can get the actual portfolio off my homepage too if you want. It's about a week delayed, and you can also get a delayed service. So check that out if you get a chance. Great show again this week. Great lineup. I'm going to let David Kosminder mention everyone once again, but great show. You guys did a wonderful job, and I just love doing these shows. So thank you guys so much for being here and making it a great show.
All right. Thanks, guys. Great show. I just want to remind – oh, sorry, what was that? Oh, okay. For everyone watching, I just want to remind you to be sure to subscribe to our YouTube channel if you haven't yet to get updates on future shows. Also, you can go to TimingResearch.com, and you can download any of the past reports or view any of the show recordings there. Be sure to join us next week. Eric Atkins is going to be on the show for the first time. Also, Christian Fromhertz, James Romelli, Jim Kenny, and Rob Hanna. And I just want to thank my guests for this week again. Rick Sadler of Hit and Run Candlesticks. Hit and Run Candlesticks.com. Adam Johnson of BullseyeBrief.com, Neil Batho of TraderReview.com, Michael Filighera of LogicalSignals.com, and Dave Landry of DaveLandry.com. Thanks, everyone.
Thank you.
Thank you.